Hello and welcome everyone. This is Matt McCall. Thanks for joining me with a new episode here of Making Money with Matt McCall. It is Monday morning here at 9:30, so it is early here this morning. The markets are just opening right now, but I wanted to jump ahead and talk about a little bit that went on last week. Take some of your questions, talk about some of the news that's moving the markets here this morning. We do have the markets up this morning. We have the S&P up slightly. We have up about a 0.5%. We have the Nasdaq 100 up about a 0.5% as well. So nice little open here. Started August. We have the iShares Russell 2000 IWM. That's small mid cap up 1%. The micro caps up about 0.8%. So small caps are doing well. And take a look at some of our innovation ARKK, the ARK Innovation ETFs, up 0.1%. So really unchanged. So we'll see how it plays out. Again, we've been open for a couple of minutes here, so nothing to really get too worried about here right now. But we will see how the market plays out throughout the day. But a few things I want to touch on here before we take some questions. Just give you a little bit of an update what happened last week. You know, the S&P and Dow were both down slightly. Nasdaq was down about 1.1%. And I mentioned the small caps are doing well today, and that's a continuation of last week. The Russell 2000 and the mid cap index, the S&P mid cap index, were both up last week. So I like that action when you see some of the smaller stocks doing well. Another sector that was up big last week was the semiconductors, up 2.3%. And a couple of the semiconductors I like are moving again this morning. We'll talk about that in a minute. Commodities were up last week. We also had the banks and utilities up slightly last week. And then we did 10-year yield kind of hanging around that 1.24, 1.25 area where we are this morning. Overseas, though, I talked about this last week on last week's show. Shanghai index last week was down 4.3% for the week. However, at its low midweek was down 6.7%. So it's rebounded. And you're seeing some of the rebound continue last night as well in Shanghai and the other Asian markets. Hang Seng down 5% last week. But again, at Wednesday's low was down 9.3%. Let me just talk a little bit about what's going on here in China. You know, a lot of the government's going after certain areas. We talked about that. Some of the tech companies, obviously, some of the education companies, but in general, I feel some of the areas that got hit with it. One of them being the electric vehicle stocks. We take a look at some of the healthcare stocks in China. The government, if anything, is backing them. So I don't see that as being much of a threat, to be honest with you. So for me, I almost see it as a bit of a manipulation. I saw these stocks pull back dramatically, and what great buying opportunities. I talked last week, I was trying to get into a Chinese biotech ETF, and it doesn't trade a lot, so I just missed the entry level. But yeah, I wish I would have gotten in because it's done very well since then. It's had a hell of a run. I think over 10% since that time, just in less than a week. So I see this as a bit of a manipulation when it comes to Chinese stocks. And I think that, you know, the theme as far as healthcare in China, electric vehicles in China, none of that's changed. Even the tech stocks, even if you have a little bit of regulation, I'm okay with it. I still think there's great upside long term to a lot of the companies over in China. Again, I know a lot of people want to stay away from it, and that's fine. But I personally, I see some opportunities over there. Earnings continue last week. Companies continue to beat on a top line, bottom line. About 3 out of 4 are beating. We're seeing some really good growth. Guidance hasn't been as clear, and that's why you're seeing some stocks report strong numbers and then take a hit after reporting numbers. Some of the big tech stocks, we saw that happen to last week. Also last week, believe it or not, was the busiest week for IPOs since 2000. It's crazy. 20 IPOs last week, folks. And that's with 3 of them being postponed. One of them is EV battery maker by the name of Clarios. With 11 SPACs last week as well. Let's talk about some of the big names that went public. And you all know my view on IPOs. When it comes to IPOs, never a buyer in the first day or first week, usually not the first couple of weeks, unless something happens specifically with that company or something in the pattern happens. Because I would say, and this is just a ballpark number, but I'm going to say probably 85 to 90% of the time, stocks will move higher on their IPO. And if they don't, there's usually something wrong with it. It's mispriced dramatically. You probably want to stay away for the near term. Moves higher on the IPO and almost always has some type of pullback in the next couple of days, next couple of weeks, next couple of months. And it forms what I call the J curve. It kind of comes back down, and then the big J comes up on this side. Once you see it start coming back up, that's when you want to look as a buying opportunity. You want to be patient. So I'm not saying none of these stocks are ever buys or sell recommendations, but these IPOs definitely are. But I thought there was four that really stood out that caught my eye. One, let's take a look at that was really the biggest name that went out last week, and this is Robinhood. It priced at the low end. It raised about $2.1 billion with a valuation just under $35 billion. It was down 8% on day one. The symbol is Hood, HOOD, just so you know. It was up slightly on Friday. It's up this morning about 3.6% to around 36.40. I'm not a fan of this company at all. I think I've made myself clear on that several times already. I honestly just do not like it. I think what they did was great for the average investor. It was great for the stock market in general, getting people involved in it. That being said, their big thing in the beginning was free trading. Well, now Schwab, TD Ameritrade, everybody else offers free stock trades. So for me, I would much rather have the infrastructure and the backing of some of those other larger companies for free as well, where Robinhood's free, but that's free as well. So I think they set a great precedent. They changed the industry forever. They're innovators. I think they're going to struggle going forward. So it's not a company that I would look at adding or even putting on my watch list at any time soon. The next company is Duolingo, and many of you have probably used this. Symbols DUOL. This is the app that's on your phone that helps you learn foreign languages. It priced at the higher end of the range. It raised about $521 million at about a $4.6 billion valuation. They currently have over 300 million users. That's over, more than the amount of people in the United States. Stock was up 38% on the first day, had a big rally. Fell the next day, fell on Thursday, went public last Wednesday. Friday had another big update. Today down about 2% at around $137.50, $137.50. This is one I will put on my watch list. I've used Duolingo. I've used other apps and software to learn languages. I like Duolingo. I think it's really good. I think it's very accessible for most people. As many of you know, I have a house in Nicaragua, so I have to have my Espanol. Enough to get by, which is about how I am now. I need to get it better. But I think Duolingo is something that's interesting. Younger generation loves to travel. Here in America, it's sad that most of us only learn one language, where you meet people from around the world that know so many languages. Even undereducated people know more languages than us. I think it's a detriment for us, really going forward. And it shows a lack of global thinking a lot of times for Americans. Look at the amount of passports people have. It's just so damn low. So for me, I think Duolingo has a big future. It's one that I will put on a watch list. The next one you may have heard of if you are a bit of a let's call yourself a amateur griller or wannabe professional griller, Traeger, and the symbol is Cook, C-O-O-K, really easy to remember. Traeger is a maker of the wood pellet grills, and they use you can use an app that connects to your grill. It's really a tech-related type of grill. It's real well known amongst people who are really into grilling. They priced their IPO last week at the high end of the range as well. They raised about $424 million at a $2.3 billion valuation. They're up 23% on the first day. And it closed on the first day. Where did it close? Around in the 22s. Then closed low 22s on Friday. And now here today, stock's up a couple pennies at 22 and a quarter. So really kind of going sideways. Not a lot of volume here on this stock. But this is one, again, like I want to keep an eye on it because you think about the more people staying at home, cooking at home, it goes along with that trend a little bit. And, more people buying homes, more people buying outdoor furniture, grills. It's always something you want to buy when you buy your first home. You need to get a nice grill outside. So that's one to keep an eye on. And the fourth one I want to talk about, the fourth IPO from last week, is Snap One Holdings. SNPO is a symbol on this one. And they make smart home technology products, all kinds of stuff from security to doorbell things to lights, all kinds of stuff connecting. It's Internet of Things, IoT. They came in on the low end of their raise and or low end of their pricing, and they raised about $249 million with about a $1.4 billion valuation. They sell their smart home products to over 16,000 professionals. So it's going to be professionals that come to your house to put this stuff in. So again, most homes will be smart homes, new ones. So it's in a really nice area. I don't know much about the company. I had to look a lot more into it. Closed day one around 16 and a half. It was up the last couple. That was on Wednesday, Thursday, Friday it was up. Today it's around $18 and change, up a couple pennies today. So it's moved up much, pretty much since it went public. It was a low of low 15s when it opened that day. We're now at low 18. So $3. That's almost 20% on the upside from the low a couple of days ago. So it's got some play. It's got some money coming in. One to keep an eye on. But Snap One Holdings, one of the smaller, but is again in an area that I think is interesting. So I want to keep an eye on it. This morning, a few things I want to talk about, or actually one big thing I want to talk about, and I put this on my Twitter last night. Square came out and announced last night as I was sitting on the couch before I was getting ready to go to bed. I checked the markets real quick, and they're buying Afterpay for $29 billion in stock. And if you're not familiar with Afterpay, I've talked about it here in my old podcast. It's a BNPL, buy now, pay later. So when you go buy something online, the next time you go buy something, and you go to checkout, you may have seen this, may not have seen it, but you'll notice it now that I say it. Below that, it's going to say, "Would you like to pay this in installments?" And it's usually 4 installments. So let's say it's $100, but you don't have the $100. You don't want to pay it now. You do 4 installments of $25 each. There's no interest. There'd be a fee if you miss a payment, but there's no interest. The companies get paid from the retailer that you're buying through. So it's something that the millennials really do, and it's really, really taking off. PayPal's getting into it, MasterCard, Fiserv, JP Morgan, Apple's linking up with Goldman Sachs to offer it. A company by the name of Klarna, Klarna, is private, billion-dollar valuation though. And then there's a firm, AFRM is a symbol, went public recently, and they're up on the news today. They're up quite a bit, I think, on the news. They're up about 5.5% on the news of Afterpay getting bought. Afterpay is a Australian company, so it traded overnight. And because it's getting paid in Square stock, it's going to move with the price of Square. And Square is actually up 7.7% today. It was down about 5% pre-market. So Afterpay right now trades here as an ADR, AFTPY. It's up about 28.5% this morning, around 91.10. If the deal is fully priced in, it's about a 30% premium, about, as I said, $29 million. And as far as the shares are concerned, the Australian shares, because those are main shares, 0.375 shares of Square for every share of the shares of Afterpay that trade over in Australia. And puts it at a price about $126.21 Australian US dollars, about 30.6% premium. And with Square price up, it's going to keep going even more. So really, Afterpay over here should be trading probably closer to 100 if it's fully priced in. But again, deals like this, because it's based on stock, will fluctuate. It's not always priced in right away. But a big move on that. And I really think the buy now, pay later is something that's not going away. It's been a trend that's been around for a while. And what's really fascinating about it, I look back and it's kind of like the old school when I was a kid. They used to call it layaway. Your parents, like my parents, didn't have a lot of money. They'd start buying a Christmas present in July because they had to start making payments to have it done by December, and they would lay it away for you, and you make your payment. So it's almost like layaway for the millennials and the younger generation. It's a new way of kind of like kicking the credit cards and the big banks in the teeth, saying, we're not using you. We're going to do this. You're not charging us any interest as long as we pay it. Affirm's now clearly a potential buy. Affirm is also much cheaper than what Square paid for Afterpay, so that's a potential buyout right there, even though it just went public. It's something to keep an eye on, but this is a real market. I've talked about this sector a few times, again, in my podcast last year. So I think this is something, again, that I think will continue. Looking ahead to this week, before we talk about some infrastructure stocks and a deal that's potentially getting passed today, 2 stocks that are going public this week that I find pretty fascinating. One is Weber. I think it's Weber, not Weber. Weber, and the symbol is going to be WEBR. And it's kind of crazy. Traeger went public last week, the maker of the wood pellet grills. Well, Weber, as we all know, is probably the leader, or actually is the leader in outdoor grills. It has over 20% market share in both the US and global outdoor cooking market. Damn, that's over 1 in 5. That's crazy. The company plans to raise about $750 million at a $4.7 billion valuation. So that's set to go public this week. Again, nothing, I'm not saying go out and buy this, but it's one I want to put on my watch list. Again, I think that I like the trend of more people buying homes. If you think the housing market continues like I do and the building continues, everywhere you look, there's building going on. If you believe in that, that secondary play on that is outdoor furniture, grills, etc. Another one's going public this week, you probably never heard of, is WCG Clinical. The symbol is going to be WCGC. It's a pretty big company, bigger than Weber, $6.1 billion valuation, and raising $720 million. What they do is they do ethical reviews and other different types of clinical trials for biotechs and contract research organizations. This number is fascinating to me. According to the company, they supported 90% of all clinical trials globally in the 2 years that ended in 2020, just last year. So in 2019 and 2020, this company, WCG Clinical, supported 90% of all clinical trials globally in the 2 years that ended in 2020. Fascinating to me. I mean, if obviously that's probably a true number, I'm going to take it for face value. But I love this area because I think the way that you're going to see companies go through the clinical trials. It's going to change. They're going to outsource a lot of it in a company like this. And the fact that they do the ethical reviews, more and more, everything's about ESG, folks, whether you like it or not. Ethical reviews are important. So this is a company, again, I'm putting on a watch list and going to keep an eye on. All right, let's see here. I know there's not as many of you watching live today because I screwed up the link, and I apologize for that. But I see that there's a few people here, and hopefully people will be watching it on the replay, obviously. I just talked about Square. I'm looking at a couple questions here. Teladoc, I talked about Teladoc last time. I still love Teladoc. I think it's a great long-term play. I don't think telehealth is going anywhere. I think you're going to see it consolidate for a little bit, but long-term, I think it's a clear leader. So it's not going anywhere, in my opinion. A couple questions on ACAD. Again, I talked about this last week. I still like Acadia. The view hasn't changed. As I mentioned, biotech companies, you report some bad news, nobody's going to buy into it until people report some good news. So until he gets some good news out of his trials, but it still has some huge upside potential, in my opinion. Let's see here. And another one just came through for BODY, the Beach Body Company. This was a SPAC. It was up at $13, fell down to 7, back to 11. Now it's down around 9 right now. When it comes to Beachbody, it's quite interesting because with this stock, it's got some really good brands, and the numbers. I remember we're looking at it a couple months ago when the SPAC was announced. It has some really nice upside potential, some really nice estimates. Coming in a little over $1 billion this year in revenue, up to about 1.7 in 2 years. That's nice growth. But some of the brands, though, I'm just kind of not as happy about some of the brands that they have. That's the only thing that really kind of scares me a bit. And there's a lot of competition now coming forward as well. And many of you know I'm in the fitness business as one of my entrepreneur ventures. And I really think that's I don't know. There's a lot of competition. They announced last week that they introduced a new MXY2 bike. It's the first connected fitness bike with 2 fitness platforms available on it. All this stuff, but again, then you have Peloton out there. You have so many others. It's not that I don't like it. I just think that it's a tough call because it has so much competition out there. Infrastructure is coming up in a second. Don't worry, it's coming up in a second. Let's see here. What else we got? Looking through just a couple. CEVA is a 5G play, CEVA. They had some really good news on Friday. We ran up to the best close since May. We're down to about 15 cents today, but as long as you stay above, let's call it that 47.5 level, this can make a run to 60. I still like CEVA here. I think this is a nice long-term play, nice play on 5G, which again is still in the early stages, folks, regardless of what anybody tells you. All right, so let me get into infrastructure here. I promised I would talk about some infrastructure stocks. This weekend in Barron's, infrastructure was in focus, and they announced this morning that they're very close to this about $1 trillion deal. Uh, I think for the first time they actually have the bill together, and it's 2,700 pages long. Uh, I, which means there's a lot of pork in there. Is all I can think about. And they said they want to vote on it in a couple of days. That just scares me. And I know this. I'm not naive. It just tells me that politicians aren't reading this. You're not reading 2,700 pages. I know they have aides that go through it that read it for them, but it's like, come on, like do your damn job and read the bill. It just seems like BS to me. But um, we'll include another 550 billion in new spending in the next 5 years above the what is rate projected at the federal level. So it comes about $1 trillion. It is going to be one of the largest amounts of spending on the U.S.'s transportation, bridges, roads, electric grid, EV charging stations that we've seen in many years. It is a bipartisan package, and just some of the breakdowns in there right now: about 110 billion for roads and bridges, very much needed. Public transit gets about 39 billion. I think that should be higher. 66 billion for rail. I like that. We need high-speed rail. It's embarrassing here, the Amtrak in the Northeast. They also have $55 billion for water and wastewater. That's huge. The amount of water that goes into the ground, fresh water, every single day is insane. I can't remember off the top of my head, but I can see if I can find it. It is insane because of holes and leaks and pipes throughout the country. It's embarrassing. Also, there's more money set aside for airports, EV charging stations. I don't have the exact number on that, but that was announced in the last 24 hours. So we'll see if that gets passed. It seems like it's going to, but we'll see if it gets passed. So Barron's doesn't usually highlight really small companies when it comes to its main articles, but I highlighted a company by the name of Atlas Technical Consultants. Really small company, symbol is ATCX. It's in engineering, and design services. It goes in and helps the redo of buildings, and engineers it all out. It's crazy though. It's a company that is not that big, but again, it was highlighted by Barron's as a potential laggard and a potential opportunity. It's only a $350 million company. It's crazy for them to do that. It stocks up 21%, obviously, in the news when that many people see it. I would not be buying anything like this right now. I mean, that's just chasing a bunch of people who read Barron's as well. And it's not like this is something you don't know about, because most people read Barron's like myself, most people in this industry, a lot of retail investors too. So I'd be very careful. It's a company that looks pretty interesting to me. I won't lie to you. But again, I'm not running out to go and buy this company anytime soon. The growth really isn't there. I don't see big growth going forward. And that's revenue growth. I don't see big revenue growth going forward. But earnings per share by 2023 could be up to 93 cents, which is not bad for a stock right now that's trading at just under $11, but was at $9, a little below $9 ending today. Again, big move, obviously, on that news. All right, so when it comes to infrastructure, I'm just going to talk about some ones Barron's mentioned. They mentioned Caterpillar, Deere, Marietta, MLM, Terex, TX, United Rentals, URI, Vulcan Materials, VMC. One of the guys who has an ETF, he mentioned Jacobs, Hubble. Jacobs is J, Hubble's HUBB. He mentioned Insteel Industries, IIIN, and United Pacific, UNP, which is obviously railroad. Some of the cell tower companies, AMT, SBAC, CCI, and then the EV charging components, which is interesting. Not the companies, but the components. Three companies that it mentioned, and three companies that I like. Amphenol, which is APH, which is breaking out to a new all-time high. It does electronic components, not just for EV charging stations, for a lot of different things. It also mentions Tyco Connectivity, which is TEL, which is hitting an all-time high today. I like this as a 5G play as well. This is a very interesting company, EV 5G, again, hitting an all-time high. And then the third one is Sensata, ST, up 2% today. Best level we've seen in about 6 weeks on Sensata. Not too far from breaking out to an all-time high that we hit in March for ST. And ST also it's a sensor maker. They also make sensors for EVs, outside of vehicles and other things. So all three I like for very different reasons, but those are three that I feel instead of it's very similar to the EVs themselves. You don't know which EV company. There's gonna be a lot of winners, but you don't know what's gonna be the big winner. But if you're buying the company that makes the batteries, and that for all different types, the ones making the sensors for all different types, making the chassis for all different types, all types, making the software for all different types. For software, for example, one that I like is Cerence, CRNC. This was a spinoff of Nuance, which is a artificial intelligence voice recognition company. They spun this off a little while ago, and this is their spun off in late 2019. This is their transportation division, and a lot of cars, most cars out there have some type of Cerence software that you could talk to it. That's what goes back and forth. So that, again, the future. So for me, when you look at the EVs, I really didn't think about this until Barron's kind of highlighted me. I'll be honest with you. Some of the component makers, which is pretty damn interesting. So those are a couple of things to keep in mind when it comes to infrastructure. All right, let's see here. We have a couple of other questions. When can we expect news about your new services? I hope soon. Trust me, I would love to share what's happening behind the scenes. Just know that what is happening behind the scenes is all very positive. All of us, all of my subscribers, you all come first. You should know that by now. I do this for you. I'm not getting paid to do any of this stuff right now, and I give away many, many free education ideas. So this isn't about the money for me. And once I explain to where I'm going and what I'm doing, let's just say it's not about the money. That's all I can say. So hopefully soon. I hope in the next week I can announce. But behind the scenes, we're working on everything we need to be working on. We're going to be ready to go in probably a month or two. I'm excited. Just put it that way. It's going to be better than ever. We're taking what we did and making it even better, and I can't wait. So very, very soon. Trust me, you'll be the first to know. I'll put it on Twitter. Anybody who sent me direct messages through Twitter will let you know where we're going. We also will do a special video here, several of them, to let you know. It's going to be awesome. Just again, please be patient. And the moment I can, trust me, I will. Okay. Let's see. Oh, the infrastructure bill affecting cryptos. Yeah, within there's a part of the infrastructure bill, which has a lot to do with it, is they want to tax cryptocurrencies. So I didn't read the specifics of it, and I don't know if that will get passed through it, but that's why Bitcoin is pulled back, and I'll talk about that Bitcoin here in a second. But yeah, they're trying to sneak in of the 2,700 pages somehow to tax cryptocurrencies in there, which is complete BS, as you may know. The tax compliance considered a major problem with cryptocurrencies. Lawmakers are looking for $20 billion in the proposal. It's said to raise to help finance their big ticket spending items. So it's complete BS. But I'll know more once we see what actually happens with this bill. It's tough to see what's actually going on here with this bill right now. So yeah, we'll see. I don't know. I can't say yet exactly what's going on with it. Let's see where else we're at here. So somebody's asking about Open-Door, OPEN. This is one of the future real estate plays. And this was a SPAC that ran up to nearly $40, all the way back down to $14.85 now. I still love Open-Door. This was a Chamath SPAC. This is a company that has huge upside. To me, and I know maybe it's early and things don't go straight up, but real estate in the next 5 to 10 years will not be recognizable as to how it is now. It just won't. The old school of calling your local realtor, going and looking at all these places, they only have access to the MLS. That's all been broken. We all have access to anything on Zillow, on Redfin, anywhere. We have access to that. Open-Door is a similar technology. It's a $9 billion company. And like I said, the stock has pulled back. I look at the growth potential. Last year, 2.58 billion in sales. Next year, looking for 9.62. So it's trading at less than 1 time sales on next year's revenue potential. 14 billion potential in 2023. That's top line growth of 35%, bottom line growth 13%. Should turn profitable in a couple of years. It's not yet, but it's growth, so I'm not worried about that. You all should know how I feel about that. However, it has a path to profitability. I always say that's the most important thing. It's losing less money every year, a path to profitability, probably 2024, but that's all priced in. We know that. So I still like open door lockdown here. I think it's a great long-term play. Is it going to go straight up? Absolutely not. But it definitely is a long-term play in my opinion. Let's see. Somebody's asked about ASTS, AST Space Mobile. The chart looks all right. I mean, this was a SPAC again, ran at 25, and then it came all the way down. It got beat up down to less than $7, back to 15. Now it's sitting around an $11 range. It's got some nice support there. It filled the gap from June. It looks okay here. I mean, it's not bad where it's sitting at this point right here. Let's see what else. I know there's not as many people viewing today because I screwed up the link. I apologize. But one more thing I want to talk about that I heard actually in CBC this morning, that garbage of a channel. TSA, that screens you at the airports. They had 2.25 million people go through yesterday. That was the highest that we have seen since the pandemic. The highest we've seen since the pandemic. IZEA, somebody just asked about. No, I don't have it. I don't like IZEA. I've been saying that for a while. I don't like that company at all. Yeah, so the highest pandemic. I was in DC for some work stuff on Friday through the weekend, and DC was popping everywhere I went. Unfortunately, on Saturday, they re-implemented the masks inside, which was a real pain in the ass. And I think the museums had them anyway, but going through the Museum of Natural History was not as much fun with a mask on. I got to tell you that. Yeah, so anyway, but it didn't deter people. The line to get into that museum was about 45 minutes long. It was packed. I mean, I saw Lollapalooza over the weekend in Chicago. I mean, I don't know how many people were there, tens of thousands, if not 100,000, people partying and listening to music. The 30th anniversary of that concert in Grant Park. People are traveling. People are getting out. I don't care what the government tells you. And again, I'm not a doctor. I'm not telling you to wear a mask and not wear a mask. That's up to you. But I'll tell you this, regardless of what I think, I see it. People are getting out, and there's not going to be another shutdown. So again, it's not my political view or my medical view. My view as just looking at from an educated person, I don't think there's going to be another shutdown. I think the odds of that are less than 5%. So I'm going to keep playing for the economy to keep moving. I'm keep playing for this bull market to continue, buy dips. And I think things look great right now. And I'm going to continue to be bullish. And we'll take a look at the market real quick before we wrap it up. S&P's up about 0.4%. The Nasdaq's up only 0.1% now, so we're fading a little bit. The ARK Innovation ETF, ARKK, near the high today, up 0.4%. And then the Russell 2000 Small Mid Cap near the high day as well is up about 1.4%. And then take a real quick look at Square and see what it's doing after its big $29 billion purchase of Afterpay. Square's up 8% and closes here. It's the best close since April. And then we have Afterpay, AFTPY, up 32.7% at $94 a share here today. So rocking and rolling on that. And Affirm, as I mentioned, the other publicly traded company in that buy now, pay later space, directly in that, is up about 8% today, around $60.75. So we got some nice movers today. But I want to thank everybody so much for tuning in, and sorry for the confusion of the link, but I will get that fixed. And obviously, people watching this on a replay. And I'm probably going to come do another one here on Wednesday morning. So get your questions ready. You can send them to me on Twitter at Matthew McCall. And again, thank you so much for continuing to follow me. Spread the word. I'm not going anywhere. I'm in the United States, working as hard as can be. I'll be in the office this week. So again, just get ready for some exciting stuff. Nothing's changing. Roaring 2020s are alive and well, and we're going to continue doing that. Go out there, tell somebody you love them, give them a hug, spread the love. Smile, enjoy life, and of course, be safe out there, and we'll see you again in a couple of days. I'm Matt McCall, and this has been Making Money with Matt McCall. Thanks for joining me. Have a great day.